Welcome to the Pirate Investor. Knowing when is a good moment to invest is something very valuable, and the next good moment is the treasure we are going to find in this adventure. To find it, we have the treasure map. We should see a big wave, night storm, calm sea, and the treasure. But why a big wave, a night storm, and a calm sea take us to a good moment to invest? Let's explain the map of the treasure. It all comes down to 3 facts. Fact 1. Our time is expensive. Look at this graph. It's a lifetime. Our time is not going to last for more than a few more decades, and no treasurer can buy it back. So, we want to invest in something that requires the least of our time. Then, what should we invest in, houses or companies? Let's see. With houses, you likely need to go there, fix issues, and deal with tenants. It smells like using your expensive time. With company stocks, however, you are only the owner. You wouldn't go to Google facilities to fix their issues, would you? Bang! Companies is what we choose. And anyway, what adventure would this be if we don't invest in the stock market? Fact 2. In the long run, on average, the value of the biggest companies increases. Look at this graph. It is the value of the biggest companies over 50 years. The value goes up. Take 2008 for example. No matter how bad is the crisis, although the value drops temporarily, and some companies go bankrupt, with time, the majority overcome it, and, on average, their value ends up higher than it was before. Are we going to bet against this? No. We will invest in the biggest companies, and let time be our ally. Fact 3. When the interest rate is high, the probability of a crisis is high too. Look at this graph. We've darkened the 2008 crisis. We call crises the night. And we marked the interest rate in blue. We call it the waves. This is what happened. The value was growing, as expected, and the interest started to grow like a wave. It grew high. Too high interest is never a good sign. We call it the clouds. Because, although no one can predict when a crisis will come, a high interest rate makes it harder to pay off debts. In some cases, impossible. And that, often, ends with a crisis. In this case, in a couple of years, the crisis came. The value of companies started to fall. We call that the storm. As everyone knows, after every storm comes the calm. A year after, the interest went back down. With that, paying debts was no longer so hard. When we spot that, we shout, "Lend ahoy!" Because low interest often means that the crisis won't last for much longer. In this case, a couple of months later, the values started to grow again. Few months later, the crisis ended, so the night turned into day. And 3 years later, the value got as high as it was before, meaning the rain stopped. Now look at the 2020 crisis. This is what happened. In pirate jargon, the waves were low. Then, they started to grow. And clouds appeared. After that, the storm started. And the night came. In the middle of the storm, the waves went back down, and lend ahoy! The values started to grow again. The night turned into day. And finally, the rain stopped. Bang! The same pattern repeated again. Each crisis is different, but this pattern tends to repeat. With it, we can interpret the state of the sea, and know where we are in our map. If the interest is too high, the wave is big. If the value of big companies falls in a recession, night storm. If the interest is down again, calm sea. A good moment to invest. So, where are we now? If you want to know, check out the video about the present month.